Take a look at the 60-minute chart of the S&P 500, with the gray area being the area overnight and the white area being the area regular pit traded time, as they call it. And you can see what happened on Sunday night. The Italian election came out. It was anti-populist. It got the people in Europe nervous, and we had a decline there overnight. But then what happened here on Monday during the trading session is that President Trump gave an out on the tariffs, basically based on NAFTA talks bringing a fair deal. Well, that couldn't happen. They were so far apart. And Speaker Ryan presses Trump to back off of the tariffs. Well, we know none of that worked, but the market had a big rally here, as you could see, on Monday. Tariff talk eases here, and North Korea and South Korea talk about getting together in April. And later on during the week, there's a talk that the president is actually going to meet with North Korea in May. That's a wild thing. So we had here on Tuesday the market making some modest gains, not a whole lot going on there on Tuesday, and even a little late sell-off during the day. And here's what happens here on Tuesday night is that the news comes out that Cohen resigns. We have this 40-point decline in the S&P 500, but it then shakes it off and moves back up all night long and ends up regaining all of those overnight. Then the news comes out actually here in the second hour on Wednesday that President Trump would sign the tariffs this week. And you could see we got a hit in there, but then it comes back again. The buyers just love it here. And then over here we started to get the sense that there were going to be exemptions on the tariffs. And then the market like that, we got another rally here on Thursday. And on Thursday also the news came out of the ECB. And Draghi removed that easing bias from his statement, and that those positive comments about the Eurozone economy sent the stocks index up. We had European stocks stronger. And then we got the word here on Thursday that Canada and Mexico were exempted indefinitely from the Trump tariffs. And then here's the big news on Friday. Payrolls come out up 313,000 plus, a lot of upgrades for the last couple of months. There was a big jump in the labor force, which kept the unemployment rate from dropping. It was 4.1% again, and wage inflation slowed, and that's what they really loved, that we could have that big increase in jobs and no wage inflation. So the buying came in instantly, and the S&Ps, as we move now only into about 90 minutes into the trading session, got up as much as 40 points, the Dow over 400 points to the plus side. So you can see this was a week where they chopped and chopped and chopped and eventually exploded to the upside in quite a powerful move here on Friday. In April will be the launch. We're looking around mid-April of our cycle workshop, cycle analysis workshop. This has been me studying cycle analysis for some 40 years, and then the last 2 years writing this workshop, and then in the last 6 months producing it. It's going to start out with 20 videos. This is a lot of viewing and a lot of my expertise that you see here. If you want to learn cycle analysis right from me, as I have, in all of these decades, then what I want you to do is I want you to go to the front of our website, go to the front page and scroll to the bottom, and when you see Cycle Workshop on the puzzle piece, click on that. You can just put in your information there, and you're going to be put on a list. And then what we're going to do is have a pre-launch price with a very large discount that you will be able to take this workshop at a lesser price. And this is more information than you would ever get from anybody learning about not only cycle analysis but technical analysis, and put you leaps and bounds above the regular chartists out there that just kind of do normal stuff. So if you like our type of charting that you see here, and I'm going to show you a bunch of it right now, then you can also send me a request to slim@slim.com for our our level 4 1-month special. And I'll send you that for half price. You can not only get all 80 charts, 80 symbols with weekly and daily cycle analysis on it, and notations and projections, but you'll also get our rankings and setups and all 250 plus of our videos. For just 1 month for $64.50. The charts are for our preferred broker, TD Ameritrade, Thinkorswim platform. So you need that to have our charts up on your platform. We take the 80 best symbols. You don't need to trade any more than that as far as your normal trading goes. That's 24 futures and ETFs and 56 of the best traded stocks, 4 of the widely held, and 4 option traders. You'll love this information, especially our rankings and setups table that you'll be able to see that kind of culls all of our information into one page. Really fantastic. So sign up for that special price on the workshop and send me a request for a link to our level 4 special service. And don't forget, follow us on Twitter at AskSlim and become a subscriber on our YouTube channel. And if you like this, don't forget to give me a thumbs up. I was having a bit of a hard time explaining what looked like a very strong cycle. Note here, slim ribbon positive this whole way in here, and here's where it turned negative, and here's where that free fall situation came in. And this 28-day period is now explained by this double cycle that exists right in here. And now you can see it exactly at 14 days right here, and then rallying again. This is the cycle I worked off of last week, thinking that it would decline into midweek and then rally. That's where I got messed up. But now this is much more dominant in this shorter cycle, and this is key. See, we're getting up to this area right there, 2789, 2803. That's cycle peak resistance and the short-term 78.6%. That's the point that I think it fails from this week. And I'm going to look for a down week this week, and that it rolls over in here and then pulls back. Now, this scenario is not as negative as it was. Even though the intermediate scenario says decline into June, this to me is simply a kind of an upward wedge going on right over here that eventually is going to fail. So right now we expect the pullback to be limited into this minor support zone in the next 1 week or a little bit longer, because if this is a 14-day cycle, it takes you to March 21st, and next week doesn't get to March 21st. So this is kind of a week-and-a-half projection right over here. We expect the next, let's call it 8 days, 8 trading sessions, for it to roll over and then come down with this downside target in here of 2712 or lower into this support zone over the next, we'll call it 7 to 9 trading sessions. That's the projection for the coming week. The NASDAQ, much better. It moves up to an all-time high, so you could see this is a different situation, as the upside condition is much more powerful. And just for your knowledge, the intermediate momentum in the NASDAQ is positive, where the intermediate momentum on the S&P 500 is negative. So, and that remains that way. And now you can see that we've moved up to another all-time high, and the market is still in the place of an expectation of a correction down into March 21st. So that would say pulling back in here within the next 7 to 9 trading sessions. Our downside target of 69.10 or lower. That's 170 points to the downside in the next 7 to 9 days. So I think that the bias to trade is on the short side after today, and today could be some kind of a capitulation. But as far on the upside, we've seen Friday capitulations turn into Monday sells, and that is possible that something like that is going to happen. So this is a look at what I think is going to be a rolling over coming here in the next week, and then getting down into that support zone, and then having another rally. And we're going to have to see if this pattern shapes up what the correction and the rally looks like. And correction and the rally are, we continually get those type of rhythms. So, it's not ridiculous to look for pullbacks when every single one of these cycles right in here got pullbacks that were similar in what you saw right over there. So it's very normal for that to happen, and the move down to 69.10 would be very, very normal in this case. So we're going to look for the stock market to get tired, give it up, and then move to the downside over the next 7 to 9 days. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel, and also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.